Nvidia is the big thing, so I'm going to spend some time on this. Nvidia, it's up about 7%, 461% EPS gain, 262% revenue gain, just amazing. And the comparisons are getting tougher, and they'll get tougher, and so the growth rates are slow. But my goodness, of tremendous growth. They also guided higher by a fair amount, though not as much as by some prior quarters. I mean, it was really strong. It's just by Nvidia's standards, it didn't raise guidance as much as it's done in the past. It's also going to split 10 for 1. It also hiked its dividend, not by very much, but 150% to 10 cents a share, or 1 cent a share post split. Blackwell, the H200 chip / Blackwell, that demand, it's in full production. Demand may exceed supply well into 2025, Nvidia said. They talked about a lot of opportunities out there, a lot of various things, a lot of partnerships, just sounded very bullish. Jensen Huang, the CEO, talked about, next industrial revolution is here. So very bullish. There's a lot of sizzle, but a lot of stake with this one, which is sort of nice to see.
My biggest position, I own Nvidia, is very, very central. I have a very huge position, and it's a big part of my portfolio. I will tell you that now because of the power behind it. I've seen this over and over again. You always stick with the leaders. I saw it with Apple 15 years ago. They specialize in this, especially when they're going to have that 10 for 1 split. I'm curious to see how far this can really go. But yeah, all in all, it's a great sign. I think Ken and I were just talking this morning. Ken's line is stay in May and make some hay kind of thing. And it's true. May's working. May historically has been not too favorable. It gets a little quiet, but man, wow, we've had a great May. And that tells you a lot. And it's because of all the innovation taking place. This is exciting. We're looking at different things. Companies are going to be changing, right? And for the good. Especially we're investors in the market. We're students of the market. We're going to start seeing a lot of these companies adapt. Those that don't adapt will most likely not be around the next couple of years as well. But all in all, I'm very aggressive in this market to answer your question. But again, I'm going to be very selective when it comes to specific stocks. I need to make sure that these stocks are leaders, and I'm only going to be buying leaders within their industry.
All right.
To the point on the, sell in May, go away, adages like that. I think it's good to have that seasonality in your back of the mind, but do treat it as a secondary indicator. There was never a time where Bill was like, oh, there's a follow through day in May, or there's a follow through day over the summer, and the summer tends to be weak. I'm not going to buy it. It's no, if there was a follow through day, if the market was looking good, he's buying. It doesn't matter what time of year it is and all of that. So just make sure you have your primary indicators and your secondary indicators, and at the end of the day, you want to go off of what the market's actually doing, not what it typically does.
Completely agree with you, Justin. And it's funny, Harold and I, when we do our monthly stay in step for our markets or subscribers, we always end off with trend lines over headlines, right? So look at the trend of the market, what's happening, what's leadership doing. But yeah, you always got to be cautious. Every market's different, right? Yeah, it's funny. Every day I wake up and don't know what's going to happen in the market, right? And but it's very reassuring. The giddy factor, the giddy thing is on high right now, so I got to be very careful with it. But yeah, it's positive, guys. We're seeing a really good market. It's been very strong. Power trend is there. We've been in a great market since November 1st. I'm hoping a lot of our clients have been increasing their exposure, being cautious, incrementally coming in, and making sure that stock is proving itself to you before you feed it some more.
Now over 2.5 trillion market cap. It's actually closing in on Apple and Microsoft for the number one market cap. So, but what do you think about the obviously great action today? What should people be doing now?
Well, and I think this is important that you kind of look at how you approached it heading into this, and you can't just look at the outcome and say, oh, I should have done this because it gapped up, 8%, 9%. You didn't know that, yesterday. No one knew that yesterday at 12:50, 10 minutes before the market closed, so you can't go off of the outcome. So a lot of us were talking about, okay, do we hedge a little bit depending on what we're doing. For me, what I did was I was kind of putting off the decision, to be honest with you, until the end of the day. And at the end of the day, it just so happened that I had kind of taken off some of my exposure. I had raised cash, and that was my way of hedging. I was saying, okay, you know what? I have a little bit of a larger cash position than I feel is warranted in this market, and I have a little bit larger of an Nvidia position, than my normal size. So, I am hedged to a certain degree because, look, the fact is, I was expecting, and this might continue, that the correlations are starting to kind of approach, more things are getting correlated. Again, when you see XLU, moving up with AI, that's a correlation that normally doesn't exist, right? XLU, the utilities aren't going with tech, but right now they are. So because
of
yes,
things like CEG,
whatever the reason,
yeah.
the fact is the correlations are approaching one for a lot of things that typically are uncorrelated. And so because of that, that's why I'm saying, okay, I was using my cash position as my hedge, kind of saying, okay, look, with things getting more correlated, having a little bit of cash in case things, went south with Nvidia. And this is kind of what we were doing on Swing Trader too. We did have some cash raised. We were slightly on margin, and we went down to, I think, like 73% or something. The idea being that if it came in, okay, maybe we could see a reversal, pick up shares on an upside reversal, and then recognizing that if it did kind of shoot up, that we were going to have to maybe pay up for some exposure. And what we decided to do is kind of take a look at, okay, maybe we have to use some leveraged market ETFs instead of the QQQ, go with a QLD. I don't think we were ready to go for TQQQ. But that's kind of, again, the way I handled it. I know some people were using options, to kind of hedge. Jim Ropel mentioned that he was doing spreads, using some, bear put spreads as kind of a hedge for his Nvidia position, because that had gotten large. So I think this is a good learning opportunity. Again, forget about the outcome. Did you have a strategy going into this that made sense?
Gotcha. But what about buying Nvidia now? It's gapping up. This is the leader of the market. It's still going strong. It still sees strong growth ahead. I mean, would you, as an add-on is one thing, or buy a new position, what would you suggest here?
Well, this is kind of like the same thing as with a lot of earnings gaps. There's a couple different strategies you could employ if you don't have any Nvidia. The one is, you kind of wait a little while, see if there's a pullback. We've talked about like that 50% retracement that often happens. If it gets support there, that might be a place for you to pick some shares up. If again you're itching, you could just buy it now, but go smaller, because again you have to look at what is your risk. Where you have to have a line in the sand of, if it comes in, which, as strong as it is, it could still come in. It could still fill in that gap. These are all possibilities and scenarios that you have to play out ahead of time. So what happens if that happens? Is your position size enough to where you could withstand what could be normal action? Or if you get stopped out, is that going to be something that really crushes your portfolio if your position size is too large? So I think this really comes down to position size, managing your risk, and then implementing that plan. And remember, it doesn't have to be all or nothing. It can be incremental. This is where when Mike often mentions the TWAP, where you're doing a time weighted average price, you're kind of letting an algo take care of it for you, where it's just going to be buying it throughout the day. And if that means it comes in a little bit, yes, that does mean you're going to be averaging down. If it goes up, it means that you're going to be buying into the strength. So you just kind of let the algo do the work for you. So yeah, there's a lot of ways that you can handle it, but I think the important thing is that you have a plan going into it, and don't just go, oh, it's up so much and I missed it, and I just want to buy it, and you just don't think about how much or where your stops are.